Hello and welcome everyone to your midweek live. This is Ankit here, and we'll be going through markets as always, taking a look at what's happening in the broader market analysis, and then we'll do a quick top-down analysis, take a look at what's happening in the news events front, and then most importantly, take a look at possible setups ahead. You know the deal. If you have any questions during the class, just go ahead and type the chat box, anything you want me to take a look at. I will take a look at when we go through the charts. All right, so let's take a look into our market analysis.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So again, this week is a bit more on the quiet front. I mean, last week I would say was one of the one of the best weeks that we've seen in a while. I mean, so far a lot of movements that happened last week. Now here we are. Things have sort of quieted down. Market digested the news from Friday. The jobs report caused a big move. So overall, markets have recovered the losses that we saw from Friday's jobs report. Now, we haven't seen a full recovery yet because market kind of started to show a topping sign on Thursday, a day before the jobs report. So market's kind of stuck in that little limbo here, trying to figure out if it's going to break out. We already were at all-time highs, or does it go sideways to maybe a little lower? So we'll take a look at the charts when we take a look at the markets. But in the other front, we take a look at correlations, we take a look at everything sort of makes sense or not, but then we have the US dollar and the bond yields. I mean, just like what we have seen a recovery in the equity markets, we haven't really seen any recovery in the dollar and the yields. They remain weak, they remain under pressure. With the lack of news data this week, we haven't really seen a big change there. If you look at the expectation for the Fed, right now, I think yesterday I checked, it was about 92% for a rate cut in September. So again, here we are. Markets went from not pricing in a rate cut in September now to pricing a rate cut in September. And this expectation kind of goes back and forth as we get that data from the markets. Now, when we take a look at overall, like I said, it's not only it's just a quiet week, but we also seeing small percentage moves. And, that's something important because, if there are small percentage moves, meaning that there's just less, good opportunities to take advantage of, because from a risk to reward perspective, things are just not really moving as much for you to jump into. So we'll take a look at it as we look at the charts. So here we are taking a look at where we are in the markets. As you can see that most of the things right here is kind of sideways. So the only big move has happened so far this week is in Swiss franc. Now, why Swiss franc is weak? Again, if you look at the headlines, I think there is some, this tariff situation going. I think President Trump announced a 39% tariff. And we just got the wires, just a few minutes ago that, the Switzerland president has left without announcing any deal. So, that is just weighing down on the Swiss franc for now. But you can see that there's a divergence happening here. Swiss franc is strong, weaker, while the euro is strong. So usually they kind of move in a lockstep. But right now, because of what's going on, we're getting a bit of a divergence here. But outside of that, you can see really is the dollar and the yen. And even the dollar and the yen, usually they are negatively correlated. So if the dollar is strong, the yen is weak. Right now, we're seeing both being a little weak here. So, percentage-wise, you can see that if it's, less than 0.5% move is not something to be very excited about. I mean, last week, dollar was on almost wanted going to close on Friday if we didn't have the jobs report. It was on track to close at about 2.5% gain for the week. Now that's a big move. Now, when you get this smaller percentage moves like CAD, barely moving, Kiwi's slightly up, Aussie 0.35%. So, this is where it's just not a whole lot moving happening here. Now, same thing happening in the broader markets, but again, the numbers looks a little bit better. We did see that recovery. So here we are, S&P. It raised those losses from Friday. So World Stock Index, same thing. You're seeing a bit of a bounce in crypto. So, the big move happened on Friday, and we're just seeing a bit of a digestion happening. Market digested news, repricing it, and a lot of times we see the reversals. And that's exactly what we've seen, minus what we see in the bond market and the currencies. Now, oil is down, and that again, there's a lot of chatter going on, between, in the commodity front. So, that's another thing to touch here. But that's really where we are. We are seeing markets sort of recovering. You can see crypto. I mean, Bitcoin, which mostly that I focus on, not really a big mover. Ethereum is catching up. Bitcoin Cash is catching up. And Litecoin is catching up. So, we're just getting that recovery from last week. So the big question is, where do we go from here? Where are the markets? So, technically we are, let me just go zoom in here. This is where the market has been. And this is a good environment where it's a good risk on. Markets are quiet. Volatility is not so high. This move was a bit of a topping pattern where it gaps higher and closes the lows of the day. And that preceded by that big move on Friday. So, this is a bit of a recovery, but this doesn't mean it's going to make a full recovery. It's kind of halfway there. And a lot of times, with a trend change, if you're looking for a trend change move, what you want to look for is when something makes a lower low with a lower high. That's when we can sort of give a confirmation that price is turning lower. As long as the prices stay above that channel, usually markets don't really see that turn that quickly here. Now, the big question is this going to be a big turn, or is it going to climb right back up here? My opinion here is that we, probably drift a little bit sideways here. Not really going to put a bet on that it's going to break above that resistance. Maybe perhaps rally a little bit here and close a little bit in a bearish candle and start to move lower. We could potentially see that, but for now, this is just a quiet time of the year. We are in August, peak summer trading. We could go sideways a little bit before we can really figure out where the direction is. Now, when we talk about, the volatility, a lot of that volatility comes from the news front. And this week, you can see it's much lighter compared to what we had last week. And even though the following week, not the next week, but we're seeing the movement. We're definitely seeing a lot more activity on the news front. So this week, we haven't had much of impact news events. We have the Swiss franc CPI. I didn't see really a big impact on this one. Even the services PMI 50.1, not a whole lot. We have the Kiwi employment report yesterday, and again, this was not a stellar jobs report, but we did see Kiwi rally on that. But again, that's where we talk about sentiment. That's just where the sentiment was for the Kiwi here. But the only good thing about this employment report was that the unemployment rose less than expected. They were expecting a 5.3. It only rose by 5.2. So we still have some important events to go through. Not a whole lot you can see in today, but tomorrow morning we have this Bank of England. Now they are expected to cut rates by 25 basis point. That's the expectation. But a lot of times, it's in the statement, it's in the report, what they say is going to have a bigger impact. A lot of time, this is already known. This is the news that we already know that's going to happen. So they're not a big surprise, but based on how dovish they are, I think that's where we can see pound move a little bit here. Overall, pound has been more on the sideways of the downside here, but this is the one to watch out for tomorrow. And then we have the Canadian employment report on Friday. But again, I don't think that none of these reports are going to be as market moving unless the broader markets really start to move. So now when we take a look at velocity score, this is where we are. We're seeing strength in this area: Aussie, Kiwi, and Euro. Nothing spectacular. I mean, I think Euro probably looks the best out of that. But then, we have the Aussie and Kiwi kind of stuck in that little range here. So we'll take a look at those. Let's talk about where the weakness is. Weakness is really in the dollar and the yen. I talked about it yesterday. I put in the Discord group. I'm like, I do like, to short the yen off this big surge that we had on Friday. A lot of times, we see this yen surge on risk-off sentiment, when there's a flight towards safety. Now, market looks a little bit better. We've seen the yen sort of back off from that level, but nothing too drastic. I think overall, we haven't really seen that big move just the way we've seen the equities. We haven't seen that. So something to kind of wait and watch. We have the mild, bearishness here in the pound and the CAD. Swiss franc again looks the weakest to me right now from a percentage perspective. But I think this again will probably be under pressure till we get a news that, okay, there is a trade agreement reached. And then I think that will probably cause a bit of a relief rally in the Swiss franc. Now, if you don't want to be exposed to that, this is where you can avoid it altogether. I think that's what's going to happen. It's going to stay under pressure till the deal is announced, and we'll probably see a bit of a reprieve rally in the Swiss franc there. So let's go and take a look at some possible trades ahead. This is where, if you are looking at anything particularly, just type in the chat box. We'll take a look at it as we go.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application. Then you'll watch the full-length recruiting video and then schedule an interview with one of our traders. Are you our next trader?
All right, so let's just jump into our trading view here and let's do some technical analysis. Now, let's see where we are in the markets right now. You can see the markets are positive for the day, trying to recover from this. So overall, if you really have to look at this momentum here, it's not really turned lower yet. I think it probably will march a little bit higher, but depending on how we close today. But it's kind of going sideways a little bit. Now, I want to show everyone about what's happening outside of the broader market. So here we are. Let's just look at the bond yields first. So bond yields first. I mean, you can see this was the big move that happened on Friday. The expectation for a rate cut jumped. Now, in the aftermath, you can see it hasn't really gone anywhere. This is where we can see that it's just going sideways for now. We did have a bit of a spike over here. It's not really going anywhere. Now, similar to thing, when you take a look at dollar looks very similar, but actually it looks a bit more weaker because dollar did move. And then you can see that this thing went sideways for the most part since that report came out, but now it's kind of going bearish. So this is a bit of a huge turnaround that the dollar is kind of going through in just the past 3 weeks. I mean, take a look at how bullish dollar was last week before Friday. So it can still kind of come back. Overall, if I go from a trend perspective, this thing did break above previous high, and this is the prior resistance. Let's kind of zoom it in here. Where we are, prior resistance. I mean, it's kind of breaking that resist or support now. So at this point, if this closed below here, this is again back in the bottom end of the range. But you can see overall direction wise, not so clear. I mean, this is above the 20 to 50 moving average. So the trend perspective, I think, is still strong, but you can clearly see the price action is weakening here. And usually this is where I get the most big, the most importantly asked question, what if the direction is showing one way, but then you can clearly see prices moving the other way? And I think this is where, you have to kind of decide on the holding period of this one. Overall, you can see dollar's not really going anywhere, but you can see where, it catches this trend. Couple of days are strong, couple of days are weak. I mean, look at this big move over here that we had before it had a big, massive rally here. So in the shorter term, I think it stays under pressure, but you can see it's above the 20 to 50 moving average. So it will probably find some support here. So that's really where we are with the dollar. That's really where the big move has happened. But even take a look at this 4-hour chart. This chart doesn't, in a normal circumstances, this will get me more excited. But I think I won't be surprised it goes a little bit sideways here rather than being very directional, because when you come to a daily chart, you realize that it's just, it's a counter trade. The trend, if you look at it, we were making lower low with a lower high, then making a higher low with a higher high. So trend wise, you're getting a conflicting pictures here. So whenever I have a conflicting picture here, I usually say, hey, stay out till things get more clearer. On the other hand, yen, here's the yen chart, and you can see yen catches its rallies, it has periods, but you can see overall it has stayed below the 20 to 50 moving average. And you can see where we are. We had a massive move Friday, a little bit strength on a Monday, but now it looks like it's kind of fading away. Now, if the market stays strong or doesn't, be under pressure, I think the dollar yen can resume a little bit more of a, selling off this rally here. I think if you want to stay with that trend, that's what the trend tells us. Now, this is what I love about, trading in this kind of situations where, I can pretty much put my stop right above that level. So if I am wrong, I'm out. My risk to reward is pretty good, where if this falls, okay, I have a nice 1.5 to 2, at least 2 to 1 risk to reward ratio. But if I'm wrong, let's just say if it just pulls back here and start climbing up, well, it could easily do that. But that's where you play the odds, and I'm out when I'm wrong sooner than later. So that's really where we are. Now, I know Swiss franc is the one that a lot of traders were looking at, but same thing, this thing, I'm going to look at the daily chart here. So you can see that this was a strong daily trend for the most part, and now it's between the 20 and the 50. So anytime I see something in between the 20 and the 50 to moving average, this is where it's in a sort of a no man's land. It could go really either way. The direction is not so clear. Now, this again looks more weaker compared to what we look at, with the dollar in the overall direction. This thing is actually a little bit more weaker here. So I think in the shorter term, it will probably keep this under pressure. And if this breaks below the support, we'll probably see the next level of support is at 50-day moving average. Again, another slow moving currency. But I think this is going to be more surrounded by this trade deal with Switzerland. So what we have seen so far is that these deals come through. It's just a matter of timing. But when they do come through, it does cause some shorter term movement. So either you be prepared for that by having your stops in place, or you avoid it altogether. That's really a personal preference. It varies from trader to trader. Now, when I go into a better currency price action, I think euro looks like the best here. It did pull back, and you can see this one has made a full recovery. So trend-wise, this one still looks the strongest to me here. I think as far as the chart goes, this was a bit of a deeper pullback. Now we have the British pound for tomorrow, and this one, I just want to highlight that this one is not the easiest short, but I think the best time or place to get a short is off this bear rallies. A lot of tails on this movement here. So as long as it stays below this 20 and 50 moving average, I would want to play more directionally, meaning that if it's catching a nice little velocity in the short term, I'm okay to sit out. I don't want to be, constantly playing this little short-term strength, because velocity don't last as long, but the trends, they definitely do last longer. So in the shorter term, we're seeing a better velocity. I think this pound, I will leave it to tomorrow as a news trade. Now let's go into the growth currencies. Here we are with the CAD. As you can see, CAD is just a messy trade. The CAD is more tied up with the USD. This one, what do you see when you look at this trend? You see a couple of up days, some really strong days, some really weak days, but overall, things are not going anywhere. This is a good indication where it allows you to kind of put that into perspective, how long you want to hold that trade for. This one, you can see there are moments where you can have some good movements in the shorter term, but you don't want to hold it for too long. That's just the way I'm dealing with the CAD here. But right now, CAD's just not going anywhere. Here we are with the Aussie and the Kiwi, and look at that. Aussie looked like it was going to break the support. It did not break the support. So pretty much, this is a classic range-bound price action. This is stuck between that range. So that means that a couple of days up, couple of days down. That's just the way Aussie's moving. Nothing too directionally where you can get on a daily chart and trade it and hold it for 2 weeks. That's just not the way we are seeing things right now. Shorter term moves, maybe last for a couple of days. That's pretty much it. Here we are with the Kiwi, and Kiwi is the one that I thought really this is going to break lower here after testing it multiple times here, and here we are. We did break lower, and then now getting a nice little bullish candle here. Overall, you can see that moving averages are going sideways. So this is a range-bound price action. This is where bouncing between the support and resistance is really where how things are moving. So this one, again, I think it's the longest range that we have seen. This goes back all the way till April. And from April to now, August, thing has gone sideways. I got this question early this week that, hey, this is not really making a lower low. It absolutely is. So maybe this is where we perhaps maybe fail around this 20-day moving average and break lower. That could potentially happen. But for now, in the shorter term, I think it's just catching a little bit of a bounce off that support area here. So as we go through all this, you can see that, the things, some things haven't changed. Aussie hasn't changed. We haven't seen a change in Kiwi. Really, the big changes that are happening is really the dollar. So, in the last month, I would say, if you are trading the dollar, that's the right place to be. You can see where it has big runs, big percentage moves, where it had a big run here, big fall here, a big run here, and a bit of a big fall here. That's really where the movements are happening. But this is some not longer term. This is still for a few days. Moves are happening a few days, but definitely a lot of tosses and turns here. So where do we go from here? I don't have a clarity on that one. I think it's still in a bit of a no man's land here. But overall, you can see that if you're staying with the direction on the upside, this is not the right time. On a velocity chart, this looks like it has more room to correct at this point. So I don't really like the dollar long here. Yen, on the other hand, we had a bigger move here. Now that I think what you really want to take a look at is the dollar and the yen. I think I still like the yen to the short side here. So let's just take a look at what's some of the closest currency pairs, like the dollar yen. This one I pointed out in the Discord yesterday. Say, hey, this, if the dollar turns, this could be the turning point in the dollar yen. Now, which is off the bull pullback. Now, you can see that we just did not get above this area, which is about 148. So I'm going to set an alert over here and say, hey, alert me when it breaks, when it does break above this 180 area, 148 area. You can kind of move that around here, because I think that's what will give you indication if this is going to break higher or lower. At this point, it's actually going sideways a little bit here. So don't really love that price action. They're kind of doing this exact same thing. Now, we identified that euro is doing well. So I think maybe perhaps that's where we want to be hunting. One of the pairs that I did post it in the Discord today was the euro Swiss franc. And you can see this thing is a sideways trade for the most part. And they do deviate from each other from time to time, and you get some really good moves. And you can see that. So euro Swiss franc for the last 1, 2, 3, 4 days have been a pretty big mover. Percentage-wise, went from a 92.80 to about 94 area. So we can clearly see the outperformance there. Could we trade the euro Swiss franc? I think for the shorter term, you can see it's broken that resistance at 93.60. Catching a 94 area. The next level of resistance is really at 94.20. So I don't really love the risk to reward here. Even though the chart looks bullish, I have like 20 pips to catch to the upside before it really, runs into the next overhead resistance. But if this can break above that, now that there's a bigger correction to be had to the upside. But again, I think this could be short-lived, especially with this trade deal with Switzerland. Now, Euro is definitely a clear winner here. So let's just take a look at Euro against other currency pairs. So the first one I want to talk about is Euro Pound for tomorrow for the Bank of England rate statement. I mean, so if you take a look at this one, the Euro Pound had deviated from each other. As you can see, whenever they do deviate, some big moves happen. We got a little bit correction over here. You can see that has, recovered for the most part. So I like this break above this 97.40 or even 97.60 area. If this breaks above it, you can see that as we have to go even longer term. But this is, turning some longer term trends here. So I think Euro Pound would be my first pick going into tomorrow for this Bank of England rate statement here on a bearish pound scenario. We can also take a look at Euro against the yen. Again, what we can see is that it did pull back and it's just recovering. So, we've got a little pullback over here, making a recovery here. If I go on the daily chart, you can see that, this can still bounce between this range here, 170, upper end of the range is 173. So it's kind of right in the middle here. So that's really where we are in the shorter term, depending on, again, 4-hour chart. I think there's a decent risk to reward ratio on that one. We can also take a look at euro dollar, see if that is something that we want to take a look at. As you can see, that euro dollar did move as well. But again, the next level of resistance is at about 177.93. In a grand scheme of things, this is the low, this is the high. So, kind of a more like in the midpoint here on a daily chart doesn't really give you a greatest signal here. So I think you want to be using the right time frame. So between an hour to 4 hours is really where you want to be trading in this environment. So these are the ones. I know we looked at the Aussie and Kiwi. They don't really love as a short, but again, we talked about Euro Kiwi yesterday. As you can see, this thing is just pushing above that resistance here. Hasn't broken out yet, so no confirmation there. Another one we can take a look at is Euro CAD. This thing, again, on a daily chart, you can see very choppy. But if you're looking at from a risk to reward perspective, we got 161 as a reward there on the upper end of this spectrum here. So you can see you can capture some trades here and there, okay, make a few pips. Trying to go for that bigger move, you might want to hold a little bit. If you're trading the velocity, there's definitely moves to be had. But you decide, what's your cup of tea? Would I rather stay on the sideline, wait for the big move to happen? Or do I want to play, small moves here and there? As long as you're not over trading, as long as you have a good risk reward ratio, that's what it really all matters. But usually what I always recommend is that you trade less when the market volatility drops. Last week was a great trading week. This was the movement that we had, in the last week and a half. I mean, take a look at big moves here. Now that's where a lot of money is to be made. Now, when you get in this consolidation to slight moves, you have to adjust your expectations here. But that's really where we are. And, as we go into the remaining part of this week, but most importantly next week, where we start to get some U.S. inflation data, I think that's where things will probably pick up here. So you want to be looking at quality trades over quantity of trades. And in a grand scheme of things, in a month, if you're doing it well or if you're doing it correctly, there's plenty of opportunities to be had here. But these are the ones that I'm really looking at for the shorter term. But I don't really love the small ranges here. Technically, some things don't look as clear. But if that's the case, that's okay. That's where you want to be a little bit on the sideline here. If you have anything that you're looking at, if I haven't covered, just let me know. But I think we kind of covered most of the currency pairs that all of us were taking a look at. All right, so let's just wrap things up here. So we got the Bank of England rate set tomorrow. That's something we're going to keep an eye on. But outside of that, trade less, especially when percentage moves are low. When you're starting to get some better price action, I'm telling you, when you look at markets, you can tell, hey, when is a good price action, when it's not. and based on that, you can make those adjustments accordingly. We're still in the early part of August. We still have a lot to go through, and especially in the coming month, as expectations are moving about this rate cut. We'll see what happens. We get inflation data coming next week. If the inflation picks up, what's going to happen. That's going to crush those in the expectation for the rate cut in September. Now, if that happens, there's going to be a big shift in the dollar, big shift in some of the yields, and I think that's really what we're going to see in the coming weeks ahead. So keep up with the markets, keep the powder dry, and stay consistent. Well, thanks for joining. Have a good rest of the week. We'll see you next one. Happy trading.